Good morning, everybody. Excuse me. Good morning, Cav. How we doing this morning? Good to see you guys. Nice to see you guys so busy. Hey, Bob. A lot of posting in the room. I like that. Um, that's how we get to where we want to be for sure. Great to have everybody back this morning. Wonderful to see you. Hope you had an amazing Easter weekend. Um, hope you ate too much, had some chocolate, saw the bunny. What does that mean? 7 more weeks of winter? No, never mind. That's a groundhog. We had a great one here in Austin, Texas. Had all the kids at the house, which is always a good time. Um, Welcome to the education room, guys. Welcome to the new week. I'm excited. I get excited every week. I really do. Get excited to come here to talk about things, to look at stuff, and to help you guys. Help you get to where it is you told us you wanted to be. And it's a wonderful part of my job is I get to do that. One of the things we do each and every morning, I'm not sure if I have new names in here or not. New faces maybe, Sir Andy 8371, that's a new one to me. Sometimes you guys come back, you've been gone for a while and then you show back up. But either way, it's great to have you. One of the things we do every morning is we go to forexfactory.com/calendar and we just look and make sure that there's no high impact news coming. High impact news is one of those things that can make a market spike and bounce and jump and do all the things we don't want it to do, because as Nexgen users, one of the things that you'll find is that we just trade patterns. We trade an awful lot of patterns. And patterns repeat themselves over and over. That's what makes them patterns. And what we do is we focus on being able to identify them. Hey, good morning, Joel. And then once we identify the pattern, that's kind of our starter's pistol to get us into the market. So we're going to go through today kind of what we go through every day. And we're just going to focus on advantages. And I want to remind you guys, everything that I talk about, I mean everything that I discuss each and every day, it does come from the Nexgen page. The foundation that you need, the rules that we talk about, the looks that I'm discussing, you can find it all. There's no shortage of information in the trading guide. All the rules that I discuss, frequently asked questions, there's the news calendar, screen capture tools, trade tracking sheets. I mean, really everything that you need. And we're gonna use these tools. We're gonna talk about these things because my job here in the room and my goal every day is just to help you guys learn to read your charts, to read your indicators, to be able to look at your charts and recognize advantages, to be able to say to yourself, hey, this is going well, and this maybe isn't exactly what I need. We do that with the high probability trend trade. And that's our focus for an entire hour each and every morning, is we talk about this trade that it's really the rules that we discuss are describing the pattern that is the trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules. This is also a trade that creates an enormous amount of confidence, a lot of trust based on that win percentage. But most importantly, this is the trade that's just going to teach you to read your charts, to be able to look at your workspace and say to yourself, I have the advantages I need to feel good about taking a trade, or sometimes even more importantly, to be able to say, wow, the advantages that I need to be in a trade aren't present. I'm going to choose to do nothing. And it's the nothing. It's the ability to sit on your hands, the ability to sit idle. That's typically what separates the successful traders from the people that are finding a little bit of struggle. Because what you'll realize, and this realization comes quickly, is that about 90% of your day is really just reading indicators. It's waiting for advantages. 10% of your day will actually be trading, actively trading in the market. I think it's even less than that, because what I've found is that when you are in the right trade, when you do have those advantages, those trades are over quickly. My average time in the market, I believe, is somewhere around 1.5 minutes per trade for the winners. It's usually a little quicker on the losers. But It's okay to do nothing. It's actually it's encouraged to do nothing, to be able to sit still, to be patient. And you are definitely going to exercise the patient bone. Once you can read your charts, though, and once you understand a couple very basic concepts, you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to be able to identify where the market is likely to stop. And these are going to work their way into everything that you do. And you're going to be able to do this with only 3 rules. I am the king of simplicity, guys. I try to break things down to their least common denominator, and do my best to not complicate. The high probability trend trade is 3 rules deep. That's it. First rule is strong trigger lines. And when the rule is met, when rule number 1 is true, you'll have the advantage of momentum. And momentum means that the market is likely to continue in the direction of the trend. Momentum is difficult to stop. And momentum, you should just picture a semi doing 120 miles an hour down the highway. And no matter how hard you hit the brakes, it's going to be difficult to stop that forward progress. That is momentum. And then once you have momentum, going to make sure that there's no termination conditions. And termination conditions are those areas where the market is likely to stop or bounce or reverse. You'll be able to identify them. You'll know that they're coming up. They won't surprise you. But if there's none in the way, there's nothing in the way, you're going to have what we call a clear path. And I'm going to tell you guys from 5.5 years of reading indicators and teaching people to read indicators, that once you understand how to identify momentum, and I promise you this lesson will take you about 5 minutes, and then once you understand how to identify one of those termination conditions, and then more importantly to choose not to trade into it, momentum and path, guys, once you have both in favor, you really have what you need to build a solid plan. You have what you need. Hey, good morning, AFLAB. Good to see you in here. You'll have the skill set that you need to create your own plan, a plan that's consistent, that's profitable. So I want you to believe that momentum and path are the core for everything that you do. And then rule number 3 is designed to pinpoint where the market is most likely to continue with the trend, to bounce in the direction that the momentum is going, where the path is clear. And rule number 3 is specific to trend trades. These 3 rules only take 2 charts to identify them as true. Your large chart leads the way, and I think that's one of my favorite phrases. Large chart leads the way. Large chart is going to define the direction of the market and let you know which way you're looking for your rules to be met. And the large chart will define the momentum in the market through rule number 1. And the large chart will let you know if there's areas that could be problematic, that are in the way. And that's where rule number 2 comes in. So your large chart is this very broad stroke of a brush, and it's a very slow moving chart. It's difficult to see change. But what it's going to do is it's going to show you the overall opinion of the market. And this first bar where my highlighter is on the large chart is really all you need to identify direction, momentum, and areas. And the large chart, you're going to make sure that you have those core rules met, that momentum, that clear path. And when that's true, you're going to head to a small chart. And the small chart is a very fast chart. The small chart is what I like to think of as a refinement chart. If this is a very broad stroke of a brush, we're painting the living room walls, the small chart's going to get you in and around the light sockets, guys. And the small chart is going to take that one bar that's giving you those first 2 advantages, and it's going to show you 20 to 30 bars on a small chart, on that faster chart. It's like an x-ray of what's going on. And we're going to use that to pinpoint that area where the market is most likely to continue. We're going to use that refinement process to find an entry. And because we're using a smaller, faster chart with smaller bars, you're going to be able to reduce risk. You're going to be able to increase your profit potential. And rule number 3 is simply is just an entry rule. And rule number 3 is only explored when rules 1 and 2 are in play. We're using these two charts because, I don't know, everybody loves a good metaphor. Who are you trading with? Or who are you trading against? So the large chart, I want you to think of them as a large crowd. These are the men and women that dictate what's going to happen in the market. The large crowd, the large chart, is the institutional traders, the people with all the money. They're the ones that when they wake up and they go, you know what? An uptrend sure feels like a good idea today. The market tends to end up in an uptrend. And they're the same people that are reacting at key areas, that are creating that momentum. And trading with the large chart, well, the large crowd typically wins. Your small chart is the small crowd. And these are the men and women that still have way more money and influence than I'll ever have. And they love to fight the large crowd. I don't know what it is. Maybe they weren't hugged enough as children. But they create these retracements, these pushes. When the large crowd says, we are going up and we're going up fast, the small crowd shows up and just puts a little ripple in the matrix. And guys, rule number 3 is taking advantage of the small crowd fight, and it pinpoints right where they're most likely to fail. So know who you're trading against, guys. There's an easy path and there's a difficult path. My first hour in this classroom has been the same first hour for as long as I can remember. So you guys that are newer here, you'll find that repetition creates recognition. You'll see that I say the same thing each and every day. And what happens is on day 1, you're like, I have no idea what Mark's talking about. And day 2, you're like, oh, I'm starting to get this trigger line thing. And then by day 3, you're like, oh, that's one of those terminations. And more often than not, by the end of your first 5 days with me, what you're doing is you're already picking out these great entries. Hey, good morning, Sid. And you're starting to understand these concepts. And by the 5th day in my classroom, not only will you understand the terminology, but you're going to recognize that what I teach in this room is effective, that what I teach in this room can be done, and it can create wins more than losses. And you're just going to learn to use the tool. And that's all the software is. It's the world's greatest elliptical, but if you don't get on it and you don't learn how to use it, you're not going to hit your goals. So we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I believe it's okay to trade when your rules are met. And I believe it's not okay to trade when your rules aren't met. Because your rules describe a pattern. And this pattern has been proven to win more than it loses, guys. So adherence to rules is like the greatest life preserver you could ever have. You guys all have the ability to simulate. And if you're one of my new users, I want to encourage you. Simulate. Get in there. Practice. Try things. And you have the ability through capture software, through screencast, to post in the room. Every time you take a trade, you can post it in the room for feedback. I'm here 15 hours live every week. The entire second portion of class is dedicated to your charts and making sure that you're reading your indicators properly. So post your trades in the room, in the classroom, guys. That's the first step in becoming a confident trader, ASAP. But don't just post a picture. Tell me why. Tell me what you see. So I encourage you guys, every time you post a picture in the room, if it's of a trade, talk about the momentum and tell me how you read your indicators. And talk about whether or not you had a clear path and show me, talk to me. This is how I read my indicators. And what we're going to do is we're going to make sure that you're reading your indicators properly, that you're understanding these very basic core concepts, that your entries had the least amount of risk, that your profit potential was there, and that your targets make sense. And every time you post in my room, guys, it's a private session. And the effort that you put into writing the whys on the chart, why did you take the trade? What you're doing is you're writing a recipe. And that recipe is going to be focused on your success, on your great chart reads, on having advantages. So make sure that you're posted in the room if it's a trade. If you look at a chart and you're like, man, Mark, and watch this, we'll just do it real quick. Mark, what's up with that blue line? I noticed the market reversed off of it, even though it had been running down for 5 hours. And I'm going to say, hey, that's what we call a termination condition. Here's the way you're going to recognize it. Here's the recipe for knowing that you shouldn't be trading into that area. And gosh, that's amazing. Thank you so much. And I'll be like, yeah, no problem. That's good. That's what we do. So post in the room. Ask your questions. The goal is that you're trading the correct rules, because the rules have been proven to win more than they lose. And what happens very often, and I'm certainly guilty of this, is on simulator, you'll try to break rules to see if you can win, to see if you can get lucky, to see if you can create this simulated money in a simulated account, to win simulated friends and drive a simulated Corvette. But when you get lucky on simulator, that thought process carries over to the live market, and very often it sets you up for long-term failure, even though you're having those short-term victories. So try not to practice the wrong rules. Be willing to make mistakes, because that's part of an education process, but try not to practice the wrong rules. And then we're going to simplify. I will hand you a trade plan that has 2 trades in it, and only 2 trades. And the first trade is the high probability trend trade, because it's what you learn in that trade. It's the chart reading that you develop from that trade that's going to carry you on to the rest of the trades. You have to learn the looks, guys. You got to know what it looks like to have your pattern. And that's the second piece of becoming a confident trader, ASAP. Nexgen gives you a spreadsheet. I give you this spreadsheet every day. I'm going to do it right now. I'm going to drop it in the chat box. Drag it over to your desktop, download it, but use this tool, because in this spreadsheet there's 4 tabs. And the first tab is this is your foundation builder, guys. This is, in the green section, what it looks like to have your rules met. And if you're committed to rule adherence, you need to know exactly what it looks like. And this is, once again, repetition creates recognition. I'm going to hand you a sheet that gives you kind of a set of rules to fill this out yourself. I've given you a huge head start on it, but the effort that you put into putting pictures into this section is really going to cement those core ideas of momentum and of clear path. And if you're focused on rule adherence, it's important that you understand what it looks like when you have weak triggers rather than strong triggers. You should be able to tell the difference between the two, and you should be committed to one. Same thing with a clear path and those termination conditions, making sure that you know the difference so that you know when it's time to pull the trigger to take that great trade. The second tab is the client trades. And this is where I steal from you guys. I'm shameful like that. If you post in my room a high probability trend trade, if you post in my room this amazing medium probability trend trade, and it follows the rules and it's well annotated, there's a good chance I'm going to steal it right out of the chat box, and I'm going to drop it into the spreadsheet. And there's over 400 pictures of you guys being brilliant with this software, finding success, taking the perfect trades. And I've just put them in there for a study guide for you new users, going through and committing that look to memory. For the high probability trend trade, there's an order of operations to defining that point of entry. I've got it for both long and short. There's management ideas. I'm going to give you a plan for management as a new user. You'll ultimately probably develop your own plan, but I've got a very mechanical, very basic, very pragmatic approach to management for the new user to help remove emotion. Those pictures are in here. We will discuss those before the hour is up. And there's also ideas of how to manage beyond the very basic template. And you'll begin to see patterns. And that's kind of the cool thing, is the first goal is to recognize that pattern that is the high probability trend trade. That's what we're really going to focus on for an hour. But once that becomes second nature, once that becomes easy, once you're like, oh my gosh, there's momentum, took me half a second. I don't have a clear path, took me another half a second. You're going to start to see the patterns that develop around your pattern. Take pictures. Take lots of pictures. When you see things, drop them in the room. Let's have a discussion. And then start filling up your section, the build your plan section. Every time somebody posts in the room and they're like, oh my gosh, here's my high probability trend trade, Mark. And I'm going to go, wow, that's perfect, Rob. And there it is with a strong bottom and strong triggers and clear path and perfect entry and awesome profits. Guys, if you hear me saying, yes, this is the one, if I steal it and drop it in the spreadsheet, you should steal it and drop it in your spreadsheet and start committing those looks to memory. As you begin to work outside of the very basic management plan, you should be taking pictures. I exited here, but because of momentum, I could have held longer. I held too long, and here was the pattern that told me it was time to exit. Guys, start working on your management plan, and then anything you see, post in the room, say, hey, Mark, I keep recognizing this pattern. What's it mean? And we'll talk about it, whether it's strong tops and bottoms. Had some awesome discussion over the weekend over what it means to have a strong top or a weak top, and the patterns that follow behind it. So the more pictures you take, the faster you're going to get to where you want to be. And then finally, every time you take a trade, drop it in the tracking sheet, guys. And this is going to pay huge dividends on your educational journey, because what you're doing is you're saying, all right, I pulled the trigger. That's it. Win, lose, or draw. Don't worry about the results, not as a brand new user. Focus on the process, because that's what's producing the results, guys. There's a link, how to annotate your chart for the best feedback, reminding you that you need to write the whys and address those advantages. How to paste it in the spreadsheet. There's the capture software. Guys, if you don't have this up and running on your computer, do it right now. It's a 2-minute download. But that capture software is how we talk. So you're going to take a picture, you're going to write on it. That's our conversation piece. And then every time you take a trade, it's important that you discuss the feedback that you got in class in this section. I made it the biggest section possible, because if you wake up in the morning and you make this part of your routine, I'm going to open my charts, I'm going to sip some coffee, have some tea, but I'm going to look at what I did the previous day. I'm gonna wake up on Tuesday and I'm gonna say, what did I do on Monday? And what worked? And what didn't work? And what kept me relaxed? And what made me feel nervous? And if you do this brief historical study each and every morning, it's gonna prepare you for the day. It will accelerate the learning, because what you're gonna do is you're gonna say, okay, what worked? Well, that one was perfect, and this one was perfect, and that one was perfect, and those all work great. Let me try to repeat this. Let me try to do the same thing that's bringing me success. And then you'll also notice what didn't work. And very often, this is what you need to work on, whether it's trading in determination conditions or maybe jumping in early. But you'll see that in the feedback section. Not only are you recognizing the patterns that bring you success, you're recognizing the challenges that you're facing as a new user as you go through this pattern recognition, and it'll help you pinpoint the lessons that you need to focus on to get to that next level. Learning the rules, committing to the rules, adhering to the rules, practicing the rules. Guys, there's a little bit of work that goes into $1 million a year job. And then keep it simple as a brand new user. Learn how to recognize a couple advantages. Learn how to turn those into an entry. I can't stress enough, guys, there's a million ways to use the software. I don't believe any of them are wrong, but I'm teaching the best of the best, and that's what this first hour is dedicated to. By the end of the first hour, or at least by the end of the first little lecture section where we go through the rules, you will have everything that you need to be successful with this software. The biggest thing is creating the recognition of the pattern and convincing yourself that it's okay to not take every trade as a brand new user, to focus on the best trades to get to where you want to be. So we're going to start off and we're just going to talk about the indicators. So for my new users, especially if you're an engineer, you don't have to know the whys on what creates an indicator or the programming or the time frame or anything. All you need to know first and foremost is that both charts will have trigger lines. And triggers, there's two triggers. There's the small triggers, those are the solid lines, and there's the large triggers, and those are the dashed lines. And it's really pretty easy. That's the extent of it. Small triggers move fast, large triggers move slow. When your small and large triggers are going up, they'll be green. And when your small and large triggers are going down, they'll be red. And that's really as deep into it as I like to get, because trigger lines, just knowing the difference between the two, you're going to use them to define momentum. You're going to use them to recognize those termination conditions. You're even going to use them for entry. So make sure you know the difference between small and large. And then both charts will have areas. And areas, I like to say, are horizontal lines that run across the chart. They all have names, and this is just naming them. That's all we're doing right now. So there's divergence highs. It's a magenta line that comes off of a pivot. And a pivot means the market went up and down or down and up. If momentum doesn't follow price, you'll see a divergence high, the magenta line. So every time you see a magenta line, I want you to think to yourself, wow, there was a loss of momentum there. The sellers stole momentum from the buyers, and you'll see it at lows as well. It's a cyan line and comes from a pivot, and all it means is that momentum isn't following price. It's just a visual. You're going to see red Fibonacci resistance. Some are thicker than others. Some print all the way to the gray section. Some stop short. But resistance is just a Fibonacci measurement, and it could stop the market. It could create an untradeable bounce. It's where the large crowds are typically making decisions. You'll also see Fibonacci support. Same thing. It's just where the market could stop, could bounce, it could break. But you'll see these lines long before the market ever gets to them. They're pretty awesome targets. You're going to see yellow 1-to-1s, and these print kind of in the moment throughout the day. These are live fibs is the easiest way to say it. And then you'll see a mid-band, and that mid-band is the only one that squiggles. And it'll run through the chart, and if price is above it, it'll be green. And very often a green mid-band can behave as support. And if price is below it, it'll be magenta. And very often magenta can behave as resistance. So just know the names. On the large chart, these are where decisions are made. These could stop the market. On a small chart, we're going to use areas for entries. So what we're going to do is we're going to break down the rules individually. We're going to go through everything, what they look like, how to study them, what they mean to you, and then we're going to piece these individual advantages together to create a trade. So rule number 1 on the large chart. Remember, the large chart leads the way. The big crowd is going to set the tone. It must have strong trigger lines because we want that advantage of momentum. And the only way you can have strong trigger lines on a large chart, or a small chart for that matter, is to trade with the trend. But the large chart defines trend. It lets you know which direction you should be looking for your rules to be met. So if the background is green, the market's going up, and if the background is red, the market's going down. And the only way that you can have strong triggers in an uptrend is if both the small and large triggers are green as well. And the only way to have strong triggers in a downtrend is if the small and large are both red, just like the background. And what strong triggers is and how you define it, in an uptrend, the smalls will be above the large. The large triggers will be wide. They're angled in the direction of that trend. And it's that space that's created between the small and large. That's your strong trigger look. And in a downtrend, it's the exact opposite. The smalls will be below the large. The large will be wide and angled down. And then once again, it's that space that's created between the small and large. That's what identifies those triggers as strong. I like to tell new users, think of scissors that have opened, and you can see that the blades have separated. When the blades of your scissors are separated, when the scissors are open, whether it's up or down, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is what you're going to hear in this classroom a lot. OFM, you're going to see it annotated on charts. And when you have strong triggers, when you have that odds favorable momentum, the market is more likely to push in the direction of the trend. Odds favorable momentum is what we're going to look for when we get to those key areas to see if it has the potential to break. Odds favorable momentum up and down. This is when we're buying Fibonacci support on a small chart or selling Fibonacci resistance on a small chart, pinpointing those awesome entries with this advantage. And guys, very often momentum will even help cover some of the mistakes that new users make because it's difficult to stop a market when it has the advantage of momentum on the large chart. But momentum dies out. It does. It just happens. It fizzles out. And when your scissors close, I think is the easiest way, when your small triggers work their way back inside of the large triggers, guys, this is a weakening of the large triggers. And when my large triggers are weak, anything can happen up or down. And you'll see that annotated on charts. ACH, anything can happen. So it's a very distinct look. Strength and weakness. Odds favorable to continue in the direction of the trend. Anything can happen up or down. So we're going to associate the look with the words that it means to us, guys. And it's difficult to risk your money when you know anything can happen. That's a 50-50. That's a coin flip. Here the deck is stacked a little bit. Here the dice are loaded and the advantage is in place. And then I like to ask, is everybody good with that? This is crude oil, and I'm going to just spread it out a little bit. Do you see the separation between the small and large? That's your momentum. And we're literally seeing momentum begin to weaken. They become weak triggers. And sure enough, there's that giant retracement. And momentum pushes it up. And you see this cycle happen over and over. Strength becomes weakness and a retracement. And strength becomes weakness and a retracement. Everybody good with that? You don't have to participate, but if you do, you'll get to where you want to be a little quicker. That's rule number one, guys. Rule number one is a large chart endeavor, but momentum is universal, whether it's a large or a small chart. Once you have momentum, you're going to make sure that you're not trading into an area that could stop the market, a termination condition. And when there are no termination conditions present, guys, that's when you have room to your profit targets. That's what we call a clear path. Termination conditions can be horizontal lines on the large chart. We've named them all: divergence highs, lows, support, resistance, one-to-ones. And these areas on a large chart are exactly where the large crowd is making decisions, guys. This is where buyers buy. This is where sellers sell. This is where the two forces fight. This is where reactions happen. So in order to identify a termination condition, I'm a big fan of writing recipes. The first thing that has to happen is price reaches the area. So dynamic Renko bars are the reflection of price, same way a tick bar or a candlestick. And when price reaches resistance or price reaches support, the large crowd has gotten there. The decision-making process kicks off. So if price reaches resistance, I want you to ask yourself, where are my triggers? Once price reaches resistance, decisions are being made. Trigger lines will tell the story. Once price reaches resistance, we're through with price. We're done with it, don't need it, doesn't matter. Trigger lines will let you know whether or not this is a termination condition. And if the trigger lines remain below resistance, it's a termination condition. That's how you decide. Price reaches, where are my triggers? They're below, it's a termination. The market could bounce, there could be a fight, it could break, or it could even reverse. And the truth of the matter is that you'll never know what the reaction is going to be. They don't send out a memo, there's no secret handshake. So if price reaches resistance and the triggers remain below, it's a termination condition. And that means that rule number 2 is not met, which means absolutely no trades into the area. And then if it reverses the market from that termination condition that the triggers remain below, that's what we call a strong top. And a strong top, it's not a rule for the trend trade, but any trend trade that happens after a strong top is more likely to work. It has a higher percentage to win. And a strong top is rule number 1 for the second trade that I'm going to give you, and rule number 1 for the high volume area trade, and rule number 1 for the momentum trade, guys. So your recognition of a termination condition that reverses the market, labeling it that strong top, should create some warm fuzzies if you get your rules met to take a trend trade after. And then the dynamic bars go down. The Renko bars go down. They hit Fibonacci support. And as soon as they hit Fibonacci support, we're done with price. Let's look to the triggers to tell the story. So ask yourself, where are my triggers? Ask it out loud. Your significant other should know that you've reached an area, because every time from your office, where are my triggers? Well, they're above support, which means that support could create an untradeable bounce, that support could break, it could set off a fight, it could even reverse the market completely and become a strong bottom. I don't know what it's going to be. So since price reached support and my triggers are above, it's a termination condition. Rule number 2 is not met. Absolutely no trades into the area. And that's really the simple recipe. And what you'll find is that when price reaches an area and a trigger doesn't break, it's more likely to create a bounce. And then it pulls right back to resistance and the triggers don't break. And it creates a bounce down, and there's a bounce off of support and another bounce off of support. And if you scroll back and take some pictures, you'll see just how effective Fibonacci can be. But areas do break. And if they didn't break, we'd be caught in the same range forever. And there's a distinct look when areas are breaking. And it always starts with price reaching the area. And you asking yourself, where are my triggers? And number 1 here is a perfect termination condition. And every line is going to stop the mark, or at least stop you. Price reaches, where are my triggers? They remain below. Let me wait for the reaction. Let me not predict the reaction. Let me sit on my hands. Let me be patient. And guys, if it's going to break, the triggers will tell the story. We're going to jump to number 3. When your small triggers, both lines, and your large triggers, both lines, get to the other side of resistance, resistance is considered broken. And when resistance breaks, it becomes support. And with that clear path and momentum, you're going to go look for entries, guys. So as a brand new user, let it either be a termination condition, sit on your hands, wait for the reaction, or a clear path. If you have that momentum, go look for an entry. And then once you know the difference between the two, it sets you up for number 2 here. And the one thing I want you to notice is that the market has strong triggers. Your small triggers have smashed through that area of resistance. 3 or 4 points, they get way above it. The momentum is present, but the large triggers are lagging behind. The large triggers haven't cleared, and the path isn't clear. And this look right here shows the potential of the market to break this key area. But because it's only potential, because the path isn't clear, if you take a trade, it just needs to be managed a little more assertively. So no trades, potential to break, clear path, now resistance is support. Absolutely no trades, potential to break, manage assertively, clear path, look for your rules to be met. And once again, we're going to go back to that crude oil, and you'll see support breaks becomes resistance. Support bounces, hits resistance, down it goes. And guys, from support right into the mid-band, right back to support, right into the mid-band, right back to support. And you're seeing reactions right at those key Fibonacci areas. And those reactions are what you can't predict. So is everybody good with that? Price reaches, where are my triggers? If they remain above support, below resistance, it's a termination condition. Absolutely no trades. And there will be times, ladies and gentlemen, where your path isn't clear because the areas are stacked a bit. And this is 90% of your day. And it's okay to do nothing. Futures markets trades billions. You need 400 to make a 6-figure income. It's not necessary to be in every move. The easiest money that you'll ever make is with momentum and absolutely nothing in the way. And then guys, that's it for large chart. There is one small chart termination condition, and it's 3 divergences in the same price range. And those 3 divergences could stop a trend. And those 3 divergences could create deeper pushes. And those 3 divergences are the only reason, 3 losses of momentum on a small chart is the only reason that I wouldn't take a high probability trend trade if my rules are met on the large chart. But if they're not there, guys, once you have momentum, you have a market where the odds are favorable for it to continue in the direction of the trend. If you couple that with a clear path, there's absolutely nothing in the way to create a bounce against your trade. So we're going to go to the small chart. We're going to look at the small chart and define our entry. We're going to use that refinement process. And you guys are going to use a limit order, which means you're going to wait for the market to get to you. And you're going to use the limit order to buy or sell a pullback. That's that fight from the small crowd. And you're going to do it at an area, at a fib, at a mid-band, or a yellow 1-to-1. And that area is going to be inside of triggers, inside of large triggers, because large triggers are where the market returns, guys. It's a moving average, and price tends to always return to those large triggers eventually. So your large triggers, whether it's the 5-1 or the 13-2 large, they're going to define where the retracement is most likely to go. And they're so good at doing that that we've put your 13-2 large triggers on your entry chart. So you'll see large and large, and you don't even have to distinguish between the two. But if they have steps on them, they're from the 13-2. We call those synthetic. And all they're doing is defining where the retracement is most likely to go. So when we're finding an entry, guys, we're going to go through it. The easiest way to do it is to have what we call favorable large triggers. Because favorable large triggers mean that the large and the synthetic are overlapping one on top of each other, which means that they've created the smallest little range on your chart where the retracement is most likely to return. And then when you shoehorn some fibs, midbands, or yellow 1-to-1s inside of those favorable large triggers, you give the market something to bounce off of, something to ricochet and continue with that large chart trend and continue with that large chart momentum and continue with that large chart clear path. And this is how we're going to use a little bit of precision to get you guys in the market. When the rules are met on the large chart, you're going to turn your attention to the small chart. You're going to go find your entry. And the first thing you need on the small chart is a reversal bar, that visual that the fight has begun, that the pullback has started. And you're going to see momentum, and you're going to see large and synthetic, and you're going to see areas, but you're going to wait patiently for the reversal bar. And the reversal bar is not your entry. This is telling you, hey, let's figure out where this downtrend is most likely, or where this little reversal is most likely to push. Price tends to return to the large triggers. You should write that down. And I have large triggers and synthetic triggers, and from the highest line of the triggers to the lowest line of the triggers, guys, this is where the retracement's most likely to occur. That's it. It's not your entry. You're just defining where the down bars are most likely to go down. But then you're going to make that box considerably smaller by looking for the areas inside of triggers, guys. And areas can be fibs, it can be mid-bands, it can be yellow 1-to-1s. Areas are not divergence lows or pink 1-to-1s. Fibs, mid-bands, and yellow 1-to-1s. And they have to be inside of triggers. And now this box defines where the market is most likely to bounce in the direction of the trend, where the small crowd is most likely to fail. And this is just the pattern. So what you're going to do is you're going to wait at that bouncy point with a limit order. You're going to right click on your chart and you're going to activate a limit order. And it's going to be about 2 ticks above that highest point of support. And if they come to you, you're in a long position with odds favorable momentum, and you're in a long position with a clear path. And you're in a long position having entered right where the market was most likely to continue. And this is that high probability trend trade. This is the small chart pattern. From reversal bar to entry, there's an order of operations. Reversal bar begins the pullback, not your entry. Define where that pullback is most likely to go with the large and synthetic, not your entry. Define where it's most likely to bounce from the areas inside. Your entry is 2 ticks above that highest point of support. And any lines, any fibs, any mid-bands, any yellow 1-to-1s below the retracement zone, below the triggers, these are outside of your window and not at all where we want to be in the market. This is where rule number 3 is no longer in play. Reversal bar begins the pullback, not the entry. You're going to define where the pullback is most likely to go using the large and synthetic triggers. You're going to define where it's most likely to bounce using an area inside. Guys, I always go all caps when I put inside. It's such an important part of the equation, because anything beyond the triggers, anything above the triggers in a short trade, guys, rule number 3 is no longer in play. You're past the retracement zone. You're past the areas most likely to create a bounce. And because you can now define where the market is most likely to continue, you understand where the market should not go. And initial stops, guys, are placed where the market should not go, typically 4 to 5 ticks beyond the trigger lines. And if the small crowd can push through, if they can get through the areas most likely to create a bounce, if they can get past the area most likely to be the retracement, You don't want to be in that trade anymore, guys. It's okay to take that loss. That loss is a normal part of a positive equity curve. But more often than not, because this is your pattern, it's bouncing in the direction of the trade. So we've just discussed a pattern. That's all we've done this morning. We've talked about identifying momentum, smalls above the large, and that's an individual advantage. And it means that the market is more likely to continue up than it is to just reverse. And we've defined areas that are problematic and how to identify when they're in the rearview mirror by the smalls and large being above. And once I have this look on my large chart, the market's it's all the way up here, guys, 97.05. And I've made the decision that it's time to take a trade. And then when I wait for the reversal bar, I don't jump in. And when I find my large triggers, I don't jump in. I'm waiting for the areas inside. I'm activating a limit order a couple ticks above, and I'm insisting that the market come to me. And you can study this pattern without ever having to be in a trade. When the rules are met on the large chart, circle that tail that you see on the large chart. That tail is the pullback on the small chart. We don't trade the tail because by the time you know it's a tail, the market's all the way up here. But if you circle that tail on a large chart, let's see if the market's going to give us an example of it this morning. If you go back and you see odds favorable momentum and you have a clear path and you circle a tail, and we'll just look at that one right there with the potential to break. Let's see where that tail lines up with on a small chart. And it actually pulled right back to the mid-band, right in the retracement zone. It's not the prettiest look ever, but it still fits the rules. And that's the pattern. And let's go back and see. This one had the potential to break. Oh, that one hit a fib. We're not going to do that. We're going to keep it. We're going to go back to this circle. All the momentum, potential to break. And if I scroll back, there's your pattern, guys. Pull back to the mid-band right inside of triggers. Down it goes. Pull back to the mid-band right inside of triggers. Down it goes. 3 divergences. I choose not to take it because it could create a higher push. And sure enough, that's exactly what it did. But ultimately, momentum and path for the win. And down it goes. Couple opportunities to make money in there. And guys, that's your pattern. Now you have to recognize that pattern. And the easiest way to do that isn't to take trades and hope for the best. Go take pictures of the rules being met individually. Strong triggers, clear path. Take pictures of weak triggers and termination conditions. Annotate your charts. Create a correlation between what you see and what it means to you. And then take those pictures and put them in the spreadsheet. This is strength and this is weakness, and I don't ever want to confuse the two. And this is a clear path, and that's a termination condition, and I really want to know the difference. And if you do that, if you study that a little bit each morning, guys, you're not going to make mistakes on whether or not you have strength or weakness or a clear path. As you take those pictures, I'm going to give you the high probability trend trade checklist. And what this does is it shows you a strong top or bottom because you're going to need that for the second trade on the plan I'm giving you. It shows you exactly what momentum looks like, never to be confused with weakness. It identifies when you have a termination and what it takes to create the clear path, so you know the difference between the two as you take those pictures. And it even breaks down that entry sequence, getting you into the market where the market is most likely to continue and creating that awareness of where the market should not go. And guys, the second page is all those pictures put into a tidy little spreadsheet, and nobody has ever followed this spreadsheet to the letter truthfully, and truthfully is the key part, and done worse than 70%. And guys, it's difficult to not make a living at this if you're winning 70% of your trades. So new users, let it be that simple. This is the best of the best way to take the high probability trend trade. That strong top or bottom isn't mandatory, but it increases the likelihood of success. So all 4 of these is the best of the best, and that's exactly what we've talked about for an entire hour. And that leads us to the KISS plan. I promised you a plan, and here it is, guys. And this one is a stepping stone. This is the beginning. This is the foundation. This is the first, not the last. And guys, you're gonna create your own plan eventually. Until you can do that, This is the one that optimizes your chances of success. And it's going to be simulation and study and class feedback and continuous practice that opens the door for you to see more. And you've got to know why you're going to enter the market. And the simple answer is because your rules are met. Because rules have been proven to win more than they lose. And it's going to help remove the emotion. You've got to know why you're going to exit. And that's because your advantages are gone before you hit profit targets, guys. And that's the only reason to take an early exit. So define your entry. And that's what we've done. We've defined the entry. We have defined where the market is most likely to continue. And that's what sets you up for management. And management is really the second but most important piece of the puzzle. Guys, management is what separates the good days from the bad days, I think. And the KISS management is based on 2 contracts. And it's designed to help you understand and trust stop placement. But more importantly, it's designed to help you get paid, to recognize that getting paid is the goal of trading. And your KISS plan management, you'll alter it when you can read your indicators probably. But until you can, keep it very mechanical. And it begins with entering where the market is most likely to continue. And your initial stop is 4 to 5 ticks beyond the triggers where the market shouldn't go. And you'll know where your risk is before you ever take a trade. Targets are predefined at $100 and $200. And from this point, there's nothing to do. You either get stopped out or you get a reversal bar in the direction of your trade. And if you get a reversal bar in the direction of your trade, you're going to redefine where the market is most likely, or where the market shouldn't go, 2 ticks above that reversal bar. And it doesn't guarantee a winner, but it reduces risk dramatically. And now there's nothing to do. It's either going to hit your target or it's going to stop you out for a tiny little doesn't hurt you loss. And if it hits the first target, guys, you're a winner. One contract comes off, that money goes into your account. And with one contract remaining, you move your stop to break even, developing trust through the second contract that the large chart advantages are more likely to push the market down than for it to reverse. And your second target's hanging out there at 200. And if they don't hit you at break even, guys, that's a $300 trade. And it's about 3 minutes of your day that you were in the market there. $300. And guys, this isn't your trading day. This is 3 minutes of your day. And if that's the best you do every day, that's $75,000 a year. Add $100 to that 300. You're in 6 figures. Based on 3 simple advantages and a lot of patience, guys. And that's my first hour. And that's my first hour every day. And this is your foundation. And in the room, I just dropped a zip file that says everything you need. And inside of that zip file is Chart Reading 101. It's the High Probability Trend Trade Checklist. It's the KISS plan and the PowerPoint that I use to teach this room every day. So you now have your rules, what they look like, how to study them, where to study them. You have the ability to get feedback on everything that you do, and you have a simple plan to follow that's been proven to win more than it loses. And guys, that's the first hour, each and every day. And the rest of my classroom is dedicated to your amazing chart reads. The rest of my classroom is dedicated to making sure that you're reading your indicators properly. And the rest of this classroom is dedicated to giving you the best feedback I could ever give. So Lonnie's got to go to work at 9. And Lonnie knows that all he has to do is post in the room and say, hey, Mark, here's my charts, but I got to get out of here. Can we make sure I'm reading them correctly? And I'm going to say, Lonnie, you better believe we can. And he says, it's a weak top. It didn't reach that fib, but everything is going down. I have strong triggers. And I have a clear path, and you do. Both small and large are below the area of support. Separation between the two. Lonnie says, Mark, I have the best of the best look here. I'm going to take the pullback to resistance inside of favorable large triggers. And Lonnie, you were late waiting on confirmation. And I have to ask you, why on earth, when it's perfect, why on earth, when it's the highest probability pattern that we ever teach in this room, why would you wait for confirmation? Why wouldn't you get in 2 ticks below resistance? Why wouldn't you give yourself the least amount of risk? Why wouldn't you make it easier to hit those targets? Guys, confirmation, there's a cost. You increase risk with confirmation. You decrease profit potential with confirmation. I'm new. I'll accept it, Lonnie. So waiting for confirmation, which, and Lonnie, I've got to point it out, you didn't, because you didn't even let it become a reversal bar. You tried to anticipate confirmation. That market still could have gone up, still could have hit resistance. Yep. So if you're going to wait for confirmation because it takes some of the sting out of it, it's all right to let that bar print. I love your trade. I love your advantages. Man, Lonnie, this is the best of the best. And it looks like it was pretty easy money. Easiest $300 you'll ever make, right? And then we have a strong top and strong triggers, and it's one of those 50-50 trades, one of those potential to break trades. And Lonnie, you take the pullback at the area that's not even inside of the triggers. So the first trade, it's perfect and you wait for confirmation. The second trade, it's not even close to perfect and you break your entry rules. And sure enough, the market comes right back to resistance inside of those triggers. And all you did, Lonnie, is you increased your risk by not being patient. But because of the momentum, you're still able to capitalize. Does that make sense? What you took here was a momentum style trade, not a high probability trend trade. And once you got that reversal bar, that momentum trade failed and it became the trend trade. It's still a beautiful trade and great hold, understanding where the market shouldn't go. And Lonnie, you're reading your charts like an absolute pro. Strong bottom, odds favorable. There was no pullback on the 13.2. That's okay. We need a pullback on the small chart. And it's starting to come back. You broke your rules and the fear of missing out. It's not a momentum trade, Lonnie, because you're on the wrong side of that momentum indicator because your divergence tells you there's a loss of momentum. What this is this is a trade that didn't give you the entry for the trend trade. You got in really early. Can I ask, was your stop down here where the market shouldn't go? Same way it was here, right? It's the exact same thing. So you took the large chart advantages and you said, I know where the market's most likely to continue and I know where it shouldn't go. And even if you get in early, you're willing to accept the risk because of the large chart advantages. Even if you get in early, you're willing to accept the risk because of the large chart advantages. Lonnie, you trust your large chart. And you know that the small chart is just an entry chart. And as you grow with the software, you'll refine your entries a little bit. But this is pretty outstanding, man. It really is. You're letting the large chart lead the way. You're letting the large chart push in the direction of the trend. You're identifying whether there's trouble or whether it's clear. And Lonnie, I can't stress enough. What you're doing is you're embracing those first two advantages and you're making sure that they're in play. And I'm telling you guys, once you have momentum and path, you'll find a way. And Lonnie, I think you did it expertly. Great job this morning. And I hope you have an awesome day at work. And I hope you keep trading like this because this is going to become work sooner than later if you do. Nicely done. And guys, that's what we're going to do for the rest of the class. Is we're going to identify termination conditions. Does everybody see it? Price reached Fibonacci support, not one trigger line broke through. There's that untradeable bounce I talk about. You guys knew about this area before the market ever got there. That's one of the huge advantages of Fibonacci. Here we had odds favorable momentum and the potential to break, and it pulled right back to resistance in the retracement zone, and the market's going down. And some of you are going to show me this trade, you S&P traders. And with that potential to break, not even the potential, smalls never got through, giant untradeable bounce. And you guys knew where that area was. For 35 minutes, you knew where the market could bounce. You knew where it could stop. And you just have to choose to respect it. And guys, that's my first hour. Are there any questions? AFLAB? Is it clearing up a little bit on day 2 or 3, I hope? Faya? BJoy K? I'm sure I'm not saying that right. But guys, day 1, Day one is always drinking from a fire hose. Day two, it starts to get easier. The language starts to make sense. By day three, you're starting to recognize advantages. And guys, this is a process. The demo process isn't to make you a professional day trader in 7 days. You now have everything you need to evaluate the software. You have a pattern, you have a plan, you have rules. All you need to do now is go back there, circle those tails, learn these looks. Bejoy, okay, thank you for that, Bejoy. It's the K that throws me off, so thank you for that. I hate mispronouncing names. Um, and occasionally I'll call he, she's, and she's, he's because I can't see you. But guys, you have everything that you need to be successful with the software. And now my hope is that you start practicing, that you get those repetitions, that you take those pictures, that you give me the opportunity to give you feedback on everything that you do and everything that you see. And you'll find that I'm not going anywhere. And the work that you put in, it's going to produce results. So I'm going to go take 5 minutes. I'm going to stretch my legs. Encourage you to do the same. And when I come back, we're going to click on the rest of the pictures that have been posted. It's your opportunity to ask. It's he. Thank you for that. I had somebody, Tracy's one of those names that you never know. And I'm like, I don't know if you're a he or a she. And some people are just, you never know. Vad, that's pretty who knows. So guys, go stretch your legs, refill your water, grab some leftover Easter candy. When I come back, we get into the second half of class, and the second half of class is dedicated to you guys. And I'm telling you right now, this classroom gets exponentially better if you participate, if you ask questions, if you post pictures. So go stretch your legs. I'll see you in 5. All right. Okay, guys, here we go. We're going to, just for you guys that are newer, I want you to see what I have to do so you don't think I'm ever ignoring you. I'm going to scroll up to the very top of the chat box here, and I'm going to start clicking on the charts, and I'm going to click on them in the order they were posted. And the one thing that I ask of you guys, if for some reason I miss your chart, if for some reason I don't see it, I don't click on it, I don't respond to it, it's not because I don't want to. I just missed it, and that happens sometimes. So I'm going to scroll through and we're going to start looking at charts and seeing what's going on. And Bob Be the Man said, Mark, I want to teach these new kids a lesson. Let's see what we do here. So Bob Be the Man. And I like this. Guys, if you want to see the perfect annotated chart, this is it. Weak bottom, and Bob, this is almost, it's close to a mid-band as a termination. Why you took this trade? Odds favorable momentum, 50-50 look, no divergence, perfect pullback, right to support inside of triggers, and that was easy money. Your ATM for 3 lots is 10 ticks for 1 and 20 ticks for 2. And that's a $510 trade. And it looks like it took all of a minute and a half for it to come to be. And Bob, this is beautiful. Great trade. And then we have the exact same trade. And then we have a strong top. Hey, good morning, Miss Cindy. And the termination condition reverses the market, so it's a strong top. And Bob says, check it out, Mark. I have a 50-50 trade. I have the smalls through the fib and the large are above. And then, guys, you're going to see this. And I'm going to do this. And Bob's going to be like, dang it. Bob, do you see how you reached Fibonacci support? And not one trigger line had broken through that area yet. You inadvertently traded into a termination condition. Does everybody see that? While this area has the potential to break, price reach support, the triggers remain above, rule number 2 is not met. You don't even have a 50-50 here. But let's go through the advantages, because it's not my job to say, Bob, you did it wrong. It's my job to say, no, it's okay. So let's look at the big picture. Strong top. What does that mean? That means that the decisions made at that key Fibonacci area were so impactful that they reversed the market, that the sellers were so intent on making it go down that the triggers couldn't break, that the market reversed, that it created odds favorable momentum. That's a huge advantage. And while the fib is problematic, look at his small chart. No divergence, no loss of momentum. Every indicator is down. And Bob, you know exactly where your entry needs to be, right at the bounce point inside of the retracement zone. And you manage assertively as you get back to that fib. And I think this is the key, being willing to manage, being willing to break even, and then when there is no reaction other than more down, you're able to ride it to the next one. Managed assertively, 5-tick stop loss, move to break even after first target with trailing stop, ready to close on a reversal bar. When you know what you're up against, you know how to manage it. And Bob, you went through the checklist in your head and you said, this one isn't perfect, let me manage assertively. And you were prepared. And it was, dude, it's beautiful. And then finally, strong bottom again. We keep seeing this in winners. Strong bottom, termination that reverses the market. Odds favorable momentum. And then, Bob, the first one you take is above the fib and not to the mid-band, and you just ride momentum. JTFI, minimum risk. When a termination reverses the market, your small chart will show that change. Bob has odds favorable on both. And does everybody remember when I said once you can identify momentum and path, you'll find a way? With that much momentum on both charts from a strong bottom, Bob says that should be an easy $100 before they even have a chance to blink, and it was. And then once the momentum is gone, it just turns into a trend trade. And you get paid again. Great job. Really nice trading, Bob. Are you live? Did you go live? I know you were talking about it. Yep. So, Bob, I want to say one thing. Oh, not yet. Having problems connecting live to NinjaTrader. Jason can help you with that. Technically, Jason doesn't have to. You know, we're not the funding company, but he will. And if there's something I can do, let me know. I'll be happy to help. I'm sorry. Was this Cav or Pete? This was Pete. Weak top. Odds favorable, and I love this. Pete says, man, I don't want to trade into a fib. Fibs can stop the market. Fibs can create an untradeable bounce. Fib can stop forward progress. So let me get to the other side of trouble with all that momentum, and I'll just take it down to the next trouble spot. And guys, it's hard to stop a market that's screaming, and trading away from fibs always works better than trading into fibs. Pete, nice trade. Nice trade. All right, Andy Man. Odds favorable, clear path. Make that a little bigger for everybody. The perfect look on a large chart. Pulled right back to resistance inside of favorable large triggers. I mean, beautiful. Andy, picture perfect. It's the highest probability trend trade. You make easy money, and then you exit before the change happens. And do you notice 3 divergences? Created a big ugly push. Awesome, awesome trading, guys. This is the NASDAQ. We've seen winners on the NASDAQ. We've seen winners on the S&P. We've seen winners on crude oil. The market doesn't know what you're trading, guys, but it sure does move in patterns, and these patterns repeat themselves each and every day. All right, Joel. Did I miss one? 6x. I feel like I missed one. I don't know which one I missed. So I'm going to start over. 1, 2, 3, 4, and 5. All right, guys. And I'm going to tell you right now, being willing to drop 5 pictures in the room is going to help. Don't be shy. You can't post too much in my room, guys. You can't do it. All right, Joel, you said bad bottom, but that's up at the top. Was there... So, AFLAB, one of the things that we say is, let's say that I've got a $200 target, right? And something changes before that target. I get 3 divergences or my stop gets hit. You just exit the trade. And not every trade is going to be a winner. Not every trade is going to go the distance. So, for example, and Joel, we'll come back to yours, sorry. So, for example, AFLAB, if Andy was in this perfect trade, right? And then the 3rd divergence prints and his target was even lower, Andy would say, oh my gosh, things are changing. Let me exit my position. And it's his ability to read charts that would let him know that big push may be coming through 3 divergences. So 25 ticks, so you break even plus 1. I love it. But that's the thing, is Andy's trading a 1 lot. He just got paid. And if he were going to hold one, that 3rd divergence tells him, okay, 2nd target isn't reached. Let me exit this trade. Let me make money. I'll wait for the next best one. So If something happens before your target gets hit, it's okay to exit. Wait for the next trade. There's always another trade coming. Great question. So Joel, was this a bad bottom off screen? It didn't come from an area? Because this chart is up and strong, right? I mean, it's up and strong. And then your small chart, you didn't just jump in with it up and strong. And small chart shows the change. The triggers roll. The small triggers roll. And then you take your magic reversal bar all the way down to trouble. This is awesome. So that's kind of that pattern we were talking about earlier. From a bad bottom. And this kind of cleared it. You had odds favorable and a clear path. But your small chart showed you some change was happening and you just took advantage of it. Nice job. And then the market hit an area with divergence. We're probably going to test the higher fibs. I like your opinion, and the market didn't care about your opinion, did they? So let's look at something real quick. Smalls and large are below the divergence high. The path is clear to the downside, but the triggers are up. This is just an ugly look. This is small triggers down, large triggers up, below the problems. Andy, you've been super goals met. That's a tough look, but you let your small chart show the change. You get the pivot stop out, triggers roll, and then you're able to take an advantage, and you get out of trouble. And then again, termination, it bounces, gap theory's over. I don't know how I feel about trading back into entered because I didn't want to miss out. Forgot triggers were wide at the time of the pullback. Find an entry at a pullback. Much better entry at reversal bar. I agree. That's the aggressive entry. Glad it didn't work. You got run over right into the termination condition. And then when it goes back and retests, then you're able to trade. Rule number 2, even on your setup, it's hard to trade into multiple fibs. It's hard to trade into the gap theory and feel good about it. So I agree 100%. Great long, beautiful exits, a little aggressive on the short, nice anticipation. But if you let those large triggers roll, it becomes much easier. Does that make sense, Joel? If you let those large triggers roll, it becomes much easier, without a doubt. And then triggers are strong. That's just beautiful. That's easy money. And Joel, this is your look, man. This is the one where the market doesn't even flinch on you. Look at that. Weak triggers. Ugh. Strong triggers. Yoo-hoo. And you held that one a little long, didn't you, Joel? I don't know. Did you post this picture in there? I like your entry. But I think you ignored a lot of trouble and gave it all back. Do you see it? I see everything, guys, just so you know. Termination, weak triggers, no reason to give all that money back. Strong triggers with a 50-50 look, but that's your 50-50 look and you don't have a trade. By the time you come up, all of your triggers are above problems. Nice job waiting for the reversal bar. So this is one of those looks. I'm going to do a little annotation, Joel, because I think this will help you. Do you see the weak top? And guys, this is for everybody. This is a pattern. So this is a weak top. And from the weak top, this is a failed 50-50 short. And very often, guys, what you'll see is from a weak top, these 50-50s, especially right around that mid-band area, are less likely to work. So when the market starts going back up from there, there's one of two things that are going to happen. It's either going to continue up and try and catch that next fib because they didn't get there, So you're going to have to watch right here and make that decision. And Joel, what you did was a nice job. Is as they came back up, the large stayed down, the small stayed below, and then you get in on the large chart, but you're fighting a little bit. I like how you wait for the reversal bar. Sold the reversal, hope to the target. I'm not going to let this trade make me so nervous because of what I had to go through. You're fighting a little bit. You're fighting triggers above 1-to-1s. You're fighting a failed 50-50 from a bad top. It's a little aggressive trade, Joel. But that patience on the reversal bar at least gave you a fighting chance. But your smalls are above the large. You have nothing but terminations. It's coming from a bad top. That's not your easy win look. Does that make sense? You have shown me through your pictures when you can do no wrong. And every time I see this look, there's one word that you tend to type on the chart. Have you noticed that pattern yet? You start using the word hope. When you know it's not right, you start using the word hope in your annotation. That's your red flag word. Great pictures. So guys, if you ever take a trade and you say, I hope, sometimes that's a little key. That's like a little something. I hope it does this. And what you're saying without actually saying it very much, no, you do you, Jewel. You're doing great. But large chart leads the way. I don't have momentum. I don't have a clear path. And I hope it goes down. And one of the easier ways to catch this, Joel, is a continuation style entry. When you hope it'll go down, but everything is screaming up. See that look right there? And there it is right there as well. That one was in determinations. When everything rolls, it really becomes pretty easy. So if you were trying to eliminate the hope, you get rid of going short with odds favorable up, and you let it just turn down. Great stuff, dude. Great trading. It's been fun watching your trading plan come into play. Marky Mark. Is there something written on there? Or are you just blocking it out? I'm not sure what you're asking. Account blocked. What's the margin to trade what you're trying to trade? I really don't know what these mean. If your account's not working, if you can't place a trade, get with NinjaTrader. Let your broker handle that. I'm not exactly sure what I could tell you about that. I don't know that mine even says buying power on it. It does. Mine says buying power 0 as well. I'm not sure what that means in the grand scheme of things, though. Sorry. That would be a... Here, watch this. I'm all about... Let's find answers, though. I'm going to be smarter, too. Buying power refers to the total amount of money available to purchase securities, including both cash and any available margin. It's essentially your account's excess equity, according to Investopedia. Margin allows you to borrow money from your broker to increase your buying power. Adding your cash balance to the available margin. Okay. So I guess it's like an excess. Maybe buying power is an excess. Look at that. I got smarter. That's kind of cool. I Google a lot. And guys, I love questions like that because if I don't know the answer, we'll search it out and we'll figure it out and hopefully we can answer it. So good stuff. Miss Jen, odds favorable. Back of the bar clears. Easy money chili dog. Right on. When rules are met, right, Marky Mark? So guys, this is what's called a chili dog trade. This was created by Ron C. in the room. And what it is when you learn the high probability trend trade, what you've done essentially is you've learned to identify momentum. You've learned to identify it. And I think more importantly, and hopefully this is what you're doing, when you see strong triggers, you say to yourself, this is a market with the potential to continue in the direction of the trend. This is the best look. It's hard to stop momentum. And then when you couple it with a clear path, you're saying to yourself, oh my gosh, this is a freight train and there's nothing in the way. I'm going to go to my pictures real quick. I take a lot of pictures, but one day I was having fun with what it means to have momentum to me. There we go. There's my odds favorable momentum. There's my weakness. All right. So when you have momentum, this is your look. This is it. This is what I see. That's what Jen saw. Jen said, that's a freight train. It's a Mack truck. And there's nothing between me and that thing here, and all of the momentum is here. And with that much momentum, it's hard to stop. It's difficult to stop a market. And guys, I'm a big fan of the visual, and that's what it means to me to have momentum, and that's what it should mean to you. And then when there's nothing in the way, how are you going to stop that momentum, right? You guys ever seen, I go back to movies and stuff, and I can't think of what I was just about to say. If you jump out of a plane, it's hard to stop you until you hit ground. And momentum and path is the same way, which is a little spooky, but you know what I mean. All right. Termination, triggers roll, not odds favorable yet, but everything says down. I like this one, Bob. And Bob says, with a strong top, with everything rolling, with life good, I'll take that little momentum-based pop. And I'm going to get paid. Same thing. Everything says down. Rules-based entry area. So you almost have all the advantages, so you know what you're up against. You find a low-risk entry, and you manage to capitalize. Absolutely beautiful. Great job. You guys are killing it. Ron C. Everything down. Nothing in the way. Make money to the fib. Base hits add up. Base hits. Why did we hire him? He gets on base. Moneyball, guys. Moneyball. Great job, Ron. And apparently momentum and path is a thing. There it is again. So AFLAB and FIA and who else? BJoy. Large chart leads the way, and I'm telling you, when it's screaming with nothing in the way, you're gonna find a way. I talk about the high probability trend trade, guys, not because I want to shackle you to that trade, but because I want you to recognize advantages, understanding that you're gonna find your way with those advantages. Great job, Pete. And I hate to say it, that's all the pictures. Wayne, is your daughter going to make it into class? We'll let you relay the feedback. Ask it. I got you. So guys, check it out. There it is again. Everything is going. So Andy, your ATM strategy, if you have two contracts, Pete has one contract set at 10 ticks. And he has another contract, probably up here at the fib. And when he gets the divergence down and momentum's over, he exits with the second contract. So your ATM strategies, Andy, if you're trading a 2-lot, you have to have your targets separated. They both, well, maybe, yeah, probably. The first one was probably preset at 10. And then you can move your stops and targets. All you have to do. So Andy, let's say I get in 2 contracts. I'm going to do it long just for grins. I've got 2 targets. So if the first target gets hit, I've still got 1. And all I have to do is click that line. I can put it anywhere. I can have it waiting up here, but I could say, well, I want to tighten my risk, right? So I can manipulate this any way I want. Does that make sense, Andy? Does that help? Okay, but can you hear Trina? Are you okay? You're using his to hear? Okay. Look at this one and make sure that you're not muted. It has to hit something, Andy. It has to hit a stop or a target. Because if you don't and you hit close, it's going to close the whole position. So if you want to take one off, drag your target to the other side of it, and it'll take it off. You betcha. Practice it on sim a couple times, and then it'll become super easy to you. Everything says up, nothing in the way. And Miss Brittany takes the chili dog. Yeah, you did. And then we get 50-50 weak top. So the challenge on this one, and Trina, you can relay this, or Miss Brittany if you're watching on YouTube. Smalls are below, the large are above, but those large triggers are a full bar away. They're above the reversal bar marker. This is what we call the gap theory, guys. And as long as those large triggers are so far away, you're likely to get run over. And that's exactly what happened, is you got run over. Your entry looks good, but your large chart said pause for a little bit. Just wait a little bit, especially from a bad top. Rule number 1 for a 50-50 trade is have a strong top, because if it's a weak top, it's more likely to continue up. And the second one, and I love this. So odds favorable, clear path, perfect entry, and this one just didn't work, and that's such a great looking trade. This had every advantage, it just didn't work. And what's interesting is of 2 pictures posted, this one wasn't included. This jump in trade without momentum wasn't included. So the one thing I'm going to tell you guys, and Jen will attest to this, I see everything. Don't hide trades. This one didn't have momentum, but it did have a clear path, and it just didn't work out. This one had every advantage you could hope for as a perfect pattern. It just didn't work out. But I see everything. I always do. Great practice. Keep it going. Great practice. And then Joel. Termination, odds favorable up, and you're going short. Bad bottom, mid band, gap theory. And this is that gap theory. When the large triggers are a full bar away, especially from a bad bottom, great patience waiting for the small chart to give some indication, and then taking it back, and then when nothing changes, you go a little further. Nice trade, Joel. Trading patterns. Then we have it again. Bad bottom to the mid band. Reversal bar going down. Price reaches resistance. Smalls are below, large are up. Fighting odds favorable. This one's a little more aggressive because you are coming off of that. Little more aggressive on this one, Joel. And it looks like you just sold the fib because of the weak trigger. I like this. Hold on. Hold on. So, Joel, they test resistance, come back, and then when they hit resistance here, your triggers say the likelihood of it continuing up is like next to nothing. And you're like, I'll take a chance. I like it. That's not nearly as aggressive as I thought it was initially. With every trigger below resistance, resistance is likely to hold. And you took a chance there. And darn near nailed the top. Good job. Good job. And I think that's our pictures. What is this? Termination, reverses the market, odds favorable, pull back to the area inside of triggers. I'll be damned it worked. Some money to be made there. Termination condition, if you took the pull back to the area, it didn't work. At least having that potential. What do you guys want to talk about? What's on your mind? And I did, Ron. Let's talk about strong tops and strong bottoms for a second. Termination, perfect. Reverses the market. Creates the fight. Bad bottom, back to the mid-band, continues to the next fib. Bad top, back to the mid-band. Looks like they're going to try and keep going up. When you're looking for those 50-50 trades, guys, bad tops or bottoms, decrease the likelihood of success tenfold. Strong top or bottom increases the likelihood of success. Know the difference between the two. It's a simple recipe. The recipe is the same no matter what. A strong top or bottom, guys. Let me find it. I've got a picture. I always have a picture. It's a no triggers through termination that reverses the market. That's it. You'll find that a lot of what I do, there's a lot of word association. And I think it's effective. If I take a picture here, and guys, I'm starting to flap my gums, just so you know. And I do this. And I say smalls below large. We'll even go colors match. Scissors open, whatever you have to do. This is strong. Odds favorable minimum. Rule 1 met. I didn't have to take a trade. But I can identify strength, and I can also do it there. And I can also do it here. And I can also do it there. And the look is consistent. And there's a point, AFLAB and Bejoy and Fea, that if you spend this time and you go to that spreadsheet that I give you and you start putting your own pictures in here. And if you're not sure when you take the picture, drop it in the room. Go, hey, Mark, did I look at that right? But it's difficult to repeatedly see an individual advantage. To take the time to type out why it's strong and not be able to recognize this advantage. And if you think back to the charts that we've been seeing people post, almost every winner had strength. And then I want you to see this. We'll use shapes on this one. That's a lot of them. Price reaches an area. Triggers remain above, below. Termination condition. No clear path. No trades in the area. Rule 2 not met. So the exact same thing. Whoops. The exact same concept. 1, 2, 3, 4, 5, 6 termination conditions. Upload that link. Hey Mark, did I do that right? Yeah, awesome. Let me go put that into my spreadsheet. Let me give it 3 minutes every morning and make sure I don't screw it up. Then the same picture. We're not trading, right? All we're doing is taking pictures. Wrong tool. Hold on. That might be it for a clear path. Smalls and large, clear the area. Path is now clear. If momentum present, look for an entry. Easy money is made with clear path and momentum, right? What does it mean to me to have it? What am I looking for? Again, share the link. Open your spreadsheet. Define your cleared path. And what you're doing when you do this, guys, is, I mean, we just spent 2.5 minutes doing it, and we're flooding the spreadsheet, but we're committing the looks to memory. We're writing down what it means to us to have it. What does it mean in terms of my trading? What's the advantage? Why should I be excited about it? Why should I be hesitant to trade into termination conditions? And you'll notice that with momentum, the market pushes. And with momentum, the market pushes. And all you're doing is you're starting to create recognition and awareness so you can take these advantages and do it. All right, your microphone is just red with no line through it. It says suppressed, not muted. Can't figure out how to change it. Trying to figure it out after class. I don't mind trying to help. I'm not a Discord. My microphone is on for sure. All right, Trina, we're going to do it again. I don't have any pictures to look at, so. Microphone suppressed in Discord. GTS, oh, you say that too. I love it. That is a staple in my family. GTS. Love it. I've never heard anyone else say that. If your microphone is sounding suppressed in Discord, it's likely due to Discord's noise suppression feature, especially the crisp AI powered. This feature is designed to reintroduce background noise, but can sometimes inadvertently filter out parts of your voice that make it sound muffled. To fix this, so it sounds like it's more the microphone suppression, not the, that's killing your background noise if you were actually speaking. Mute your microphone, Trina. See if you can actually mute it. Maybe you can't hear because the microphone is trying to talk, but I won't let you talk. If you can't hear in the Discord room, start by checking your audio settings in both Discord and your operating system. Ensure your headphones or speakers are properly connected. Volume is turned up. The issue persists. You can't hear me from the app, but you can from the website? Okay. Or try the web version of Discord. There you go. I don't know enough about it. I mean, that's mine. That's the microphone. So if I'm talking and I mute, now suddenly you can't hear me, and then I mute, and now I'm good. But when it's you, I want to say it's down here. Whoops. What did I do? Hold on. I keep messing that up. Down here where you see your name, make sure those headphones aren't hit, Trina. Where it says deafen. Make sure that those aren't clicked, and maybe that'll fix it. I'm moving everything out of the way. Dun, 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 not clicked. I don't know. I'm trying. I am not a Discordologist. That's a true thing, I'm pretty sure. Here says suppress too. It's because we're in a room that doesn't allow participation speakers. All right, thanks, Josh. We pretty much came up with nothing, huh? I know, right? Smalls are up, large are down. I don't have momentum. All my triggers are above support. I can't really go short. I do have a clear path up, but I don't have any momentum to push it. And I'm on the wrong side of triggers here. All I did was address the three things, and I only have one of them. And then here, the S&P working its way down, but we have weak triggers right at a fib. And that's pretty tough. Guys, what do you want to talk about? Tell me what you want, what you really, really want. Just waiting for rules to be met. Did I mention 90% of your day would be waiting? There we go. Hey, Jonathan. Jonathan's like, let me give this poor kid something to do. Oh, look at that. No, he's not. He's like, here you go. So guys, volume mixer speaker. If you right click on the little headphones, there's the open volume mixer. Let me show you that one. I'll show you how he got there. Right click on the little microphone, open your volume mixer, and you can make sure that your sound systems are good through there. Thanks, Jonathan. I didn't even think about that. So mine looks a little different, but it's the same thing. Discord, system sounds, Microsoft Teams, OBS, Snagit. Don't know why I would need Snagit to be at 100. Appreciate that. All right, guys, I'm going to step out for a few. So we're slowing down a little bit in here. Rules aren't being met. People aren't posting. So what that means is you've had this awesome opportunity to ask a million questions. What about this? What about that? What does this mean? How do we do this? And I'll come back. Joel, we'll start with you. Cool. I'm going to go walk away while you guys post. I'll see you in a few. guys, here we go, tail end. Joel, are those the ones that you posted? I've got 5, 6 of them here. Are those the 6 that you're referencing? Would you mind reposting them? I'll completely own that it was a mistake on my end. I thought I got all of yours. Did I miss a whole block of them somewhere? Oh, I did. I did miss a block of them. They looked exactly the same. I think I know where to look. Don't repost them. I'll get them. Triggers pull from fib but never crossed. Pull back to prior divergence. Bought and tried to go up to the red fibs, but got run over. So short against triggers, short into a termination. So Joel, pretty common theme here. The short entry doesn't work against momentum into a termination, but the long works out from a termination to the next area. Do you see the difference between the two? No clear path, no momentum, difficult to win. We have what we could call a recurring theme. Everything says up with odds favorable momentum and you went short for 30 bucks. But when you went up with momentum from a termination, you made all the money. You know, there's one thing, Joel, that John Novak always told me. Don't fight triggers on a strong chart or on the large chart. Don't fight triggers on the large chart. Don't fight momentum on the large chart. Don't fight the large. Essentially, don't fight the large chart. And trading against strong triggers, no matter what your opinions are going to be the hardest trades you ever take. And this, using these big charts, you're putting a lot of risk on fighting everything. But when you've got weakness and a termination, it becomes pretty easy. There's a very discernible difference. Weakness and a termination, and it becomes easy. Weakness, add a termination, it becomes easy. And then, of course, even more importantly, when you've got everything in the same direction, so there's your termination, weak triggers, you go short and you get out of the termination. And then you've got everything pointing down and you try to go long, and I don't know why. Why do you try to go long here? With every indicator on every chart going down, you went long, Joel. I don't know why I thought it'd be okay to go up here. You got cocky. You got a little cocky. But then with every indicator saying down, it's pretty easy to go down with it. Do you see the difference? That's what I want you to see. I'm not critiquing your trades on a you did it right or wrong. I want you to see the difference in your success rate. Everything says down and you go long, and it's difficult, and look what the market does. And then once it rolls and heads up, you find the easiest success easy. And I think that's one of the biggest things. You've got to let the large chart lead the way. And what termination condition, hold on. What termination condition did the market reach here? Joel, are you with me? Can you guys still hear me? None. Right? So if you're going to try to go long, I mean, you're fighting everything. And then once it rolls, once the momentum's gone, once things start to change, you find a way to go up. Great stuff. The fact that you put so much time into it, this is odds favorable, but it's directly into a termination. Arriving at fibs, bad top, there's that word again, hoping. Hoping the market will reverse, but only after you go, let's see, you go long, okay, at the termination against momentum, and they retest as they do. And then you hope again, and that time it works. Got a little bit of fight in you, Joel. You've got a little bit of fight in you, my friend. And I believe this is the block that I missed. Is that it? That's the one. Everything says down and it's easy. Termination holds, everything rolls, and it's easy. That's the one. That's it. There's your patience piece. Everything says down and it's easy. Everything says down and your long is difficult. But once it rolls and it agrees, it becomes easy. Says down, you made money. Weak triggers roll, you go up, but directly into a termination condition. It's the same fib and it creates a big bounce. And then you go long again directly into the fib. And if you wait to get to the other side of the fib, it's nothing but money all the way up. Termination, flat triggers, no divergence, smalls roll, and then there it is right there. When everything says down in the term, it's easy for you, Joel. I like it. We found where you fight. Everything says down, you get in, it's easy. Again, nice job. When everything says the same thing, guys, it's hard not to find success. Great job, Joel. Awesome, awesome pictures. And it's so much fun to say it's a fib, I hope it goes up. But it's so much easier to say everything says up, let me go up with it. And Joel, I think you are like a half a click away from having total mojo consciousness. Where you're gonna ebb and flow with that market because you're figuring it out and you're getting your things. And I think you find a lot of success, and you find easy success, and you find the struggle success. And if you're cool with the struggle, that's great. I hate the struggle success. I don't do well with that. Great job, Joel. I appreciate how much you post in this room. I hope the feedback's helpful. Nothing to post with this look. Sitting on my hands. I don't either, Joel. Because what I find is that, and guys, tell me if I'm the only one that does this, because I might be. When I fight, right, and this would be a good example, Pete's picture. When I form an opinion, my adrenaline levels go up. When I form an opinion or when I fight, guys, I get sweaty palms. I get nervous. I start using that word hope a lot. But when everything is screaming in the direction, I feel very calm. I feel very relaxed. I feel very confident. And yeah, it looks like a knot, doesn't it? It's just all tangled up. Your stomach hurts in the wrong trades. Guys, your body tells you. And I hate that feeling, so I try to avoid it. But you've got to, and I'm gonna say this again, and I'm gonna throw props to Joel. You've got to take all those pictures. You've got to take all those looks. You've got to put yourself in that position of struggle so that you can see the pattern that creates the struggle, so you can learn to avoid the struggle. And sometimes it's just better to take the picture that you're not going to do anything. I love those pictures. You hear my voice in your head, Andy? I'm so sorry for that. Look at this. Odds favorable, clear path, and just, it's easy. It's a good thing. Didn't take this historical goals met and chilling. I love that. But does everybody see it? Every indicator on every chart suggests that market's going down. And what did the market do? It went down. Everything over here suggested up. And what did it do? It went up. It doesn't have to be hard. We tend to make it hard, but it doesn't have to be. It doesn't have to be hard. Good stuff. Great pictures, guys. Great lessons. Great lessons. And look at this. So what's the only direction? If I want the easiest trades, which direction should I be going on the S&P? Should I be looking for longs because of this divergence? No. And it doesn't mean that my rules are met, but it means that's the path of least resistance because this market's been cranking down forever, right? And maybe my rules aren't met yet, but if I were going to look for a trade on crude oil, wouldn't it make sense to trade away from Fibonacci? Wouldn't it make sense to not trade into Fibonacci, to go with the trend, to follow the triggers? And we're not there yet. There's still that indecision. The colors don't match. But you can start doing that. You can go, whoa, this is the easy one. Let me look for my rules to be met this direction. Great lessons. I love it. Love it, love it, love it. What do you guys want to talk about? You guys notice that that was a strong bottom? And then it pushes up, and with weakness, it retraces. And now it's headed up again from the bad top. Weakness. Smalls get to the other side. I love this. Joel, this is great patience. Large chart's losing momentum. Small chart has a termination. Smalls get below the large, and then it becomes pretty easy. And you're right at a termination on that large chart. Those pink 1-to-1s on a big time frame, those qualify. So you have weakness at a termination, and then you let the small chart tell you that the change is coming, and it's just easy money. Great job there, Joel. Everything says up, and you go up. Love it. Joel's like, let me show you some easy ones, Mark. Everything says down, and you go down. Goodness. Hold on. One more. Everything says down, and you say down. I wouldn't say that you sold at the reversal bar. You sold on a down bar here. You never even got a reversal. They couldn't even make a reversal bar. Everything was going down so strong from a termination. Joel, that's 4 easy ones in a row. And your targets seem to be pretty consistent. 7 or 8 points a trade per contract, give or take. So what's, hold on, so 8 points is $200, right? And you traded 2 lots. So let's just say $400 a trade. And you find 5 trades a day going with momentum and trend. And you multiply that by 252 trading days a year. That's a pretty awesome year, I think. $500,000 based on going with the trend, going with momentum. That should be the goal. I don't need all the trades. I don't need to be in every move. That's not bad. It's more than I make a year working for Nexgen. But you don't have to be in every move. And I think that we're starting to see that, right? I don't have to take a trade into a fib and hope it breaks. I can either let it break or let it roll and then look for the trade. It's downtime, guys. I think downtime is where money's made. Doing nothing is where money's made. Not giving it up and then having to make up for the losses. That's where we're at. Anyone ever broke their rules 2 or 3 times, found yourself in a hole, then you take two perfect trades and you're only break even on the day. That's frustrating. Avoidable losses are frustrating. And the cool thing is you don't have to be great on day one, guys. I posted this one in the room. And Joel, I don't even know that there's struggles, to be honest with you. I think you read your charts so well that you start to anticipate. Does that make sense? You're such a good chart reader that you're anticipating your moves, and now you just have to wait for your turn to move. I don't think struggle is the right word for you. So guys, Kaizen is the Japanese concept, meaning continuous improvement. That's what I try to do in this room. Continuous improvement or good change, small incremental improvements and processes to achieve lasting positive change. Yeah, I've done that too, Andy. You get to break even and you get cocky and invincible and you end the day. You start breaking your rules because you think they don't apply. Guys, this idea of Kaizen is probably one of the greatest concepts I've ever come across in my life. The idea that you don't have to be perfect on the get-go, that you don't have to be a pro instantly. Big fan. Yeah, by then the market is tired and so are we. Amen. Trina Wayne said that he was going to get that tattooed on him. Kaizen. I beat him to it. There we go. I got that one put on the other day. I had to. I'm a fan. Just nestled it in some old ones. All right, Joel, let's see what we did. Market reaches a termination. I disagree. Smalls are up, trend is up. You go short, and it looks like you got stopped out. And then you go short again, and that's the one that works once the small triggers roll. And then everything says down, and it's easy. And Joel, this is a pretty good one. So this look, your first short is the I hope it goes look, right? Not waiting for the reversal bar. Everything is strong. I hope it goes. And then when it doesn't go, you nail the trend trade. Beautiful, beautiful job on that one. That's acceptable losses, right? But you didn't have that reversal bar. You didn't have that fight and failure. And here you did, and it becomes easy. And then there, when you have momentum on both charts, that's when that jump in works, Joel. Do you see the difference? Momentum here, but not here. And it's hard to take a momentum-based trade. But when both charts have separation, it works out. It would be his first. You guys fly into Austin, Trina. I'll do it for him. Take a weekend in the hill country. Joel, do you see that? Without the momentum, it's hard to do the jump in. But with momentum on both charts, that's when it works pretty nice. I like it. It's a good look. It's a great trade that just didn't work. And then great recovery. Because you're like, okay, if momentum fails, it's a trend trade. And it was. It was perfect. Great job on that one. I like that. Good stuff. And that's the same look there. Once it starts to weaken, it turns into that trend trade. That would have been an appropriate one to have an entry here that didn't work and a follow-up as well. Great stuff. Did I get them all? Yeah, I did. Look at them scramble, guys. They're trying so hard. The large triggers still haven't rolled. This still isn't a strong bottom. Do you guys see that? They still haven't been able to reverse those large triggers. Weak bottom, back to the fib, gap theory, down it goes. All right, good stuff. I like it. How we doing? What's up, Chris T? Showed up in the room. Been a while. Joel, my weekend was outstanding. I had both of my boys over, and then like 3 or 4 of their friends. So one of the things that we've always done, my wife and I, is we've always been that the parents that the other kids call mom and dad. So we had like 4 of our extra kids over for Easter lunch. It was so much fun. And then my wife got them all Easter baskets, which is kind of cute. I say kids, they're all in their 20s. They're all grown-ups, but it's weird. Why the large chart leads the way. If you're getting impatient, the small tried to sucker you in. Yeah, it did. Yeah, it did. It's easy to get sucked into the siren song in a small chart, but if the large chart's not giving it up, it's okay to wait. What stinks, though, is between 10:39 and 11:15, it becomes easy to form an opinion. It really does. Toys with you all the time. Yep. Been a while. Day job has you traveling all over New York City, Baltimore, St. Louis. Goodness, home for a couple weeks. I like it. Let me know if I can help. I agree. I think my wife and I decided we're going to start traveling again. We like being in Austin and close to the kids, but there's still too much of the world to see, so we might take this show on the road again. Boat to UK? I don't think so. Not yet. Not yet. I'd love to, though. It's gold, Andy. It's harder to get a nursing license in overseas. I had a friend that went actually to New Zealand to be a nurse. She's an ER nurse, brilliant nurse. It cost her like $15,000 in 9 months to get her license over there. Wasn't worth it. It was pretty crazy, yeah. I want to go to the Northeast. She's got an interview with a place in Pennsylvania. Middle of nowhere, Pennsylvania. I think that'd be fun. They're screaming for nurses. They are in America, too. Nurses work hard. Andy's a nurse. Thank you, Andy. Nurses work hard. You're done? Are you really? Oh, getting the license? No, not if you're from there. But to take, it's kind of like, so I had a friend here from Pakistan. And in Pakistan, she had a chemical engineering degree. And in America, she worked behind the counter at the gas station. Because she couldn't get her credentials to follow her to the US. This was a long time. I don't know if it's different now. She was brilliant, and couldn't find a job with it. So, it's interesting. It's interesting how the world works. You left at 17, 56 now after seeing the world. Still not going back to stay, Jerry? No. So what we did, and Jerry, you haven't been around, I think, as long. Um, my kids moved out of the house a couple years ago. And my wife and I took a road trip from Texas up to Oregon, then spent 6 months in Oregon and 6 months in Washington. We spent about a year in Dallas. Um, so kind of one of those empty nester. I want to see everything. And I've never been up to the Northeast, really. I was born in Virginia, but I was just a baby. Yeah, it's pretty nice. It's nice. Getting paid to travel is what it is, which is pretty cool. Check it out. Odds favorable, momentum, and a clear path. And I've got a mid band inside of triggers. Mexico, New York, Pulaski, New York. No son of the month. See, I have no desire to snowmobile. We're a little outside here. I hate cold, Marky Mark. I hate cold. I've got so many screws in my spine that it hurts to be cold. I would rather it was 120 degrees. My stop is so much farther than where the market shouldn't go. But I want to see it all. Yeah, I want to see Maine and New Hampshire. We did Boston once and went up to the White Mountains and saw things change, and that was a lot of fun. When we were in Washington, we went to Banff, Canada for our anniversary. All the different national parks between Texas and Canada on that side of the country. Just amazing. It's so much fun to do that. Europe is small, right? Jen, you can go to 10 countries in 2 days. You could travel Texas for a month and see everything. And then when you get to America, I mean, just all over the United States, it's everything. It's pretty cool. I still want to go to Europe, though. I want to go hang out. Guys, what are we going to talk about trading-wise? Are we going to call it early today? The market's not giving rules, Matt, right now, which is a challenge. Did you guys notice that my mid-band was on the wrong side of the triggers, and I didn't know if or when it was going to stop? So I had to pick an arbitrary stop, and they hit me, and then it went down. Takes you 2 days to drive to Italy, drive through France, it's all squashed in. So there was a road sign once. Beaumont to El Paso. That's it right there. So that sums up Texas, Jen. So Beaumont is on the east side of the state. El Paso is on the west side of the state, 857 miles away. Oh, I love your dog. Cute little puppy dog. Man, my dog has the same bone. Has the same bone. Yeah, no, Australia is huge. I mean, Australia is a whole continent. That's 1,300 kilometers. Andy? Isn't that crazy? They're about this is why arbitrarily entering on the wrong side of the triggers doesn't work out. Holidays in Europe today. Crude is asleep, so you will call it a day. There you go. It's your birthday, Jen? Happy birthday to you. Finally, old enough to have a drink. Congratulations. You got to let us know when it's your birthday at the beginning of the day so we can all gush over you. Good stuff. I like that. That's why you said it at the end. Yeah, I'm the same way. I'm the same way. I think mine falls on a weekend this year, which is good. Have a great evening. Go eat some food that's not good for you and have a non-alcoholic beverage and enjoy it. We'll see you in the morning. All the kids are home? Yeah, I get that. That's awesome. Enjoy it. I feel the same way. When I have a full house, life is good. I guess we could see what gold is doing. Chris is trading gold. Let's see if there's anything going on in gold. See if any rules are met. Guys, normally the market's giving up entries, and wow, looks like gold's been putting on a clinic. We'll let it calculate. Definitely into a termination condition now, but there was a 50-50 that worked. There was a high probability trend trade that worked. Came back for you. There's another one. A lot of medium probabilities, huh? Good looks, though. Gold doesn't always flow that well, so that's pretty awesome. I personally don't trade gold. I find that it overruns a little bit more than some markets do. I think gold is like baby NASDAQ. But the patterns are the patterns, right? And once you get your flow down with it, you find a way. We always find a way. That wasn't the one I wanted to open. Ah, there we go. We'll see what gold wants to do. Notice that they're fighting right at a fib, guys. Does anyone think that's just coincidence? Decisions are made, right? Horizontal lines on a large chart. Decisions are made. You know where they are. And you can choose to wait. It has been a bit more settled, Chris. Right on. I don't watch it a whole lot. Wayne in here will throw in gold charts a lot. And he has great success with gold. Sounds good, Miss Trina. Have a great afternoon. Thank you for being here. Right on. Isn't it funny how every market has its own